What's up, you guys? We're here from OneGlanceTrader.com, and in this video, I'm going to go through a stock that I'm long-term bullish on, that I'm aggressively building a share position of a minimum of 1,000 shares. And in this video, we'll go through what the company is, why I like this company, and the trades that I'm placing. So I'm selling puts and I'm selling covered calls. So I already own shares in this company. So I'm selling covered calls while I'm also selling puts as well to reduce my cost basis and pick up some extra income. And if you like the sound of that, make sure you smash that like button and don't forget to subscribe. So the company is, as you can see on the screen, is Hut 8 Mining. Now, Hut 8 Mining is one of the biggest North American crypto mining stocks. So you guys will know that I am long-term bullish on Bitcoin, and I love my crypto mining stocks, mainly down to the volatility that it gives. And Hut 8 Mining is no different, and you'll see some of the returns I'm making on selling these puts is absolutely insane. And if you guys are interested, I also do a weekly video on me trading the wheel strategy and more recently selling covered calls on Riot blockchain, which is another crypto mining stock, and some insane premiums I've been getting over the last few weeks. So I'll link to that in the top right corner and also link it down below inside the description. So as I mentioned, Hut 8 Mining are a crypto mining stock. They are based out in Canada, unlike Riot and Mara, which are the other two biggest crypto mining stocks that are based out in the US. Um, you can see here, and it's very similar across Riot, Hut, and Mara. And again, I'm not going to go through all of this. Is that you can see their triple-digit growth across the board in mining revenue, net income, assets, and diversifying their revenue streams, which we'll talk about inside a second. So they have just over 5,000 self-mined Bitcoin, and we'll talk about that more inside a second. They've got hash rate. So if you guys are not familiar with how it works, it's all about the rate that they can solve these complex algorithms and whatnot. And the more power that you have, and the more mining machines that you've got, or mining rigs as they call it, the better it is. So they are on par with Riot and Mara. I think theirs is slightly higher, but you can see here that they are investing heavily to increase that hash rate to nearly double it to mid 2022 to 6. The higher the number, the more potential Bitcoin you can mine. And what they've recently done is that they've diversified their portfolio into Ethereum as well. So not only mining Bitcoin, but they've also started to mine Ethereum as well. And then just talking about the kind of hash rate and capacity. And again, I was talking through this with my coaching group earlier, that you can see here that by 2022 their capacity is really ramping up to where they were inside 2018. And you can see we talked about their hash rate going up, and you can see in this turquoise section here is again in the back end of 2021 they've also started Ethereum mining from there. So all the numbers looking up, and I appreciate that a lot of this stuff is dependent on the value of Bitcoin, because if Bitcoin goes up, Hut 8 Mining, Riot Mara, they all go up, and vice versa. So all they're doing is setting themselves up to make sure that they can get as many of these coins as possible, because they also believe, like me, that in the long term that these coins are going up. So the more they can get today at I can't remember, like the 57, the 60,000 mark, and if it does go to 100k plus, it's going to seem very cheap as time goes on. So we talked about it again as well, with 5,053 Bitcoin mined, and we've got that upward trajectory on a quarter-over-quarter basis. And Hut Mining 8 owns more self-mined Bitcoin than any other traded public company worldwide, and that is an amazing stat. And when you look at the share price, and again, one of the reasons why I like Hut Mining 8 is if you compare the share price to a Riot and a Mara, um, you could argue that this is a quote unquote cheap stock and still play the same volatility in terms of premiums of selling options on this stock. So if you have a look at the current take a screenshot of this. So if you have a look at the current element of where Hut Mining has been on this upward trajectory since the start of 2021. And the reason why I'm calling this out now, and the reason why I'm placing this video now, is we've got the 50 period moving average, but now we've got this situation here of where you can see that it's had a gap down and this low to over here. I don't know what the low was. I'll have to go back and check, but the low looks like it's just under around the $10 mark where we got some resistance there. And the reason why Hut 8 mining gap down is because for the first time in a long time they published a month over month decline in the number of bitcoins that they actually mined. So even though I'm showing you that they're increasing their power, they're increasing their hash rate, but they still reduced the number of bitcoins that are mined. And it's a very complex thing, and it's not one for this video. But there are, in my opinion, external factors such as network difficulties in terms of mining. And I've not seen, or I don't think RIOT and Mara have published the amount of Bitcoin that they have mined. I wouldn't be surprised if they've also done a month-over-month loss as well. That's not to say that they're not better or worse than any of the other companies. I just see this drop inside in the short term, in the micro, i.e. in the next 1 to 3 months, as a buying opportunity, and in my case, selling puts and selling covered calls. Then if you look inside the long term, in a year to 2 years time, when when Hut's eventually going to be up here, it'll be a worthwhile conversation to be having. So this is the reason now why A, I'm making this video, and B, aggressively selling puts and covered calls, which what I wanted to do. And again, if you look at the share price here, 11, it's at 10.55 pre-market. So if we have a look at RIOT, for example, RIOT's trading at 32, and then if we go to Mara, I think Mara's taken a big hit recently, as you can see here, bam, but also at 49. So if you look at that compared to the premiums you receive it as a percentage, you're getting the same amount. So why would you go into a $48 stock when you can do the same thing with a $10, $11 stock, where as a company, they are roughly all about the same. So they all have their pros. One may be a better hash rate than the other, but ultimately all three are in prime position to grow as Bitcoin rises and as they increase their mining output. So if we go back now to my files, and if we have a look at my position, so what we've got on the screen now is all my positions on the Interactive Brokers platform. And if you're interested in looking at Interactive Brokers, there is a link down below, so make sure you check that one out. So the first thing to mention, I'm just going to move this to this side over here, is that I do own already 200 shares of Hut Mining 8, an average price of 13.35, and you can see here, if I move this across slightly, you can see it in that right corner. Now my cost basis is $2,670, and I do have an unrealized loss because Hut Mining 8 closed at 10.56 of $523. So the unrealized loss doesn't really bother me at all, because I know that this stock will increase might take 1 to 2 years or 6 months or 3 months. I've got no problem holding this stock for the long term and just keep selling covered calls while we're waiting. So as I said, my aim is to make a 1,000 share position with an average cost basis of hopefully around the 11-10 mark. So 10-11k, so that's gonna be about 5 to 6% of my overall account. So it's a fairly small position, but I feel I can create and generate a lot of income with a 1,000 share minimum position. So if the stock keeps dropping, I will continue to buy more, because the premiums are so good. It just makes sense to kind of do so. And eventually I could probably make enough money from covered calls and puts to actually make more money than whatever my cost base is, the 10, 11K that I might go into, because it's just so volatile, which is great. So what I'm firstly going to show you is this one. So I've got a call. So I own 200 shares at 13.35. So I sold my two contracts. Each contract is 100 shares. What this basically means is I'm willing to sell my 200 shares, if by December 3rd HUT closes, at or above $14. So I got paid $24 per contract, so that is $48. And if you divide that by my cost basis of 2.67k, that is a 1.8% return on my money. So even though I'm down on an unrealized, I still made $48, 1.8% return, which is going to be absolutely fantastic. So if I just get rid of that, the next piece now, all the other positions are all put positions, as you can see. So if we go through the December 3rd positions first, that's the call. That's definitely not what I wanted to take. December 3rd and December 3rd. So the current price is 10.56. I sold 3 contracts at 11.50, at 11 and 10.50. So currently my 11.50 and my 11 are what's called in the money, i.e. the current price is below my strike price. Now if we look at the premiums I made, so three contracts, but for each contract I made $54. If you divide 0.54 by 11.50, 4.7% return in a week. Crazy. Same thing here, made $25, 2.2% return in a week, and then $14, 1.3% return in a week. Absolutely insane in my personal opinion. So today is Friday, market has not yet opened. I'm probably and will get assigned the 11.5, the 11, and potentially the 10.5. Currently, this is out the money by 60 cents, but who knows what's going to happen today. Now, I could roll this one for another week, pick up some more premium. I'll probably make some nice premium in doing that. I could probably roll this as well. So I'm gonna see what happens. And what rolling basically means is that you buy this put back. So it'll cost me 108 to buy the put back, 66 and 39. And then I will immediately simultaneously open a new sell position that is greater than 108, 66 and 39. So I receive what's called a net credit. So I'm going to get paid money and buy myself more time. On this one I might have to go out by 2 weeks, to pick up a net credit, because then I'll pick enough theta or time value to get above these numbers, to then pick up some more premium. Part of me might just get assigned the shares, because if you look at it, I already own 200, that'd be 500, 600, 700 shares. I'm not going to work out the cost basis now, but my cost basis will probably drop to 11.5, just above 12, something along those lines. And if we close anywhere near this amount, selling 7 covered calls at a cost basis, or at my cost basis of 12 or even 13, that's going to be 2-3% minimum, I think, in 1 week, making some good money doing that. So again, I'll see how the market opens, and then I'll kind of make my call on it in terms of what it is that I want to do, with those positions. So then, when the market dropped yesterday, I opened up some new puts, December 10th, December 10th, December 10th. That's all of them. I opened 1 contract on each. I've learned a lot from trading options, and one big tip that I can give anyone that is trading options, that's looking to build a position, is probably shouldn't have gone heavy at 3 contracts at 11.5. I probably would have done one at 11.5, one at 11, and one at 10.5, for example. But that's why you can see I've gone for the 10, 11.5, and 9.5 there, and not put 3 contracts on one particular strike. So on here we've got again, what I'm doing is dividing the premium by the strike price of the collateral I've put up in reserve, and you can see here that's 3.8%, 5.9%, 5.6% in what I think it was about 12 days, or 7 days, sorry. So in about 7 days, I made 5.9% return on my money. That's just crazy. Like, that's just unbelievable volatility for only putting, like, 1,150 up. Like, I could have just got 10 contracts of this, for example. What's really annoying is I might actually get assigned this. This one here I might roll, because I don't really want it to be really heavy on at 11.5, considerably it's already at 10.5. So I'll have a look at this one. This one is probably the one I'll probably look to do something with, to see if I can lower this to at least 11. 11 from there. So that's my current position at the moment. Like I said, my aim is to build up a minimum of 1,000 shares. I'm happy to hold them for the long term. I do think Bitcoin will rise. HUT will get back above $11. And again, if you just look at the chart, HUT, it's taken a nice little dip off its highs at 1657. Down to 10, so that's a good percentage down there. And again, it's probably got some room to go. It's hasn't been oversold for a long time, so it might still have some room to go. But I'm happy just to keep averaging in as and when I've got a big enough account to do that. And then I'll continue to sell covered calls aggressively on this, to hopefully reduce my break even. And you never know, I might make enough in premium to cover my cost bases to make these shares absolutely free. That would be the kind of ideal, because if you're making 5-6% return on your money every single week, it's not going to take a long time for you to actually get 100% return. So that's going to be awesome. So like I said, I'm really looking forward to that. I really hope that you guys enjoyed this video. Comment down below, like and subscribe, and I should catch you on the next one.